Good afternoon, everybody. This is Nakamura. Now, I would like to review the financial results for the first quarter, and I will be going through the first half of the presentation and looking at the numbers. And I would like you to confirm the slides in front of you and also the screen in front of you. And I would like to first of you go through the most recent results, and I will cover about 4 points or 5 points and give you the overview. And in starting from the March of this year, Novalese have been included in the consolidated P&L, and obviously the sales were able to mark 24.4 billion yen, which is a record high for the quarter. And in terms of segment, which is XTKP, the space revitalization segment is performing quite solidly, and the first quarter sales and EBITDA has marked the record high as well. And at the beginning of the year, we were able to start a very good start smoothly. And in terms of the business and strategies as a topic, so I will give you details. Nagao-san will be giving you the details later on. But those are the 3 points that took place in the most recent quarter, and these were all in Q2 in June. But S3, we have injected additional capital, and we own 19.62%. And now it has become a group company under the equity method. And so, as I said here, we are going to accelerate our activities to revitalize the bridal industry. And for the whole leisure and lodging businesses is solid, and we started operation of 3 additional Upper Hotel buildings starting from June. And starting from January, we did 2 rounds of buybacks, and that has completed on June 5th. And of the 10% of the outstanding shares, we have acquired 4 million stocks worth about 7 billion yen. And so we've done a buyback of about 4 million shares and 7 billion yen. And now moving on to the numbers. For the first quarter, this is the consolidated P&L. And as I mentioned earlier, starting from this quarter, we have included Novalese into our consolidated P&L, and so we now have the space revitalization Ricotta as well as Novalese as our 3 segment. And with the 3 companies, there are differences in booking the sales and administration cost, and so in terms of the impact on the operating profit, there's some limited impact into the consolidated sales, but in terms of the quarterly sales, we achieved 24.4 billion, which is a very solid number. And as you see in the box highlighted in red, for the fiscal year in 2020, here we have achieved 1.8 billion in OP, and in terms of the progress, it's about 25%, so it's pretty solid. But the orders is very strong, especially for the XTKP, which is the space revitalization business, is doing quite strongly. And so, as we mentioned at the end of the fiscal year, the forecast is going to be overshooted, I think. And to make it easier to compare, we have the space revitalization business, which is the TKP, XTKP business, taken out separately. And as you see, for fiscal year February 2026, this is the most recent number, and sales are 12.51 billion, and EBITDA is 2.5 billion, and OP is 2.009 billion. And doing face-to-face training or face-to-face business, and people are returning more to the office, and because it's first quarter, there's more training demand, and also there's demand around long-term usage of lodging, and these are both doing solid. And so we had very strong a demand for rental space, and also lodging and hotels are doing very solid, and so therefore we were able to increase both sales and profit compared to the same time last year. And when we look at the space revitalization business, we were able to mark the record high in sales as well as EBITDA, and OP was a little bit short, but it was very close to marking the record, so we were able to achieve a very strong result for the piano. And moving on to the space revitalization business, this is the XTKP sales by service. And if we try to show the result before COVID, it becomes very long. And so I've taken this middle out, and we're comparing pre-COVID as well as the more recent years. And as you can see, sales are very strong. And compared to pre-COVID, the hotel sales are very strong, and also, as you can see at the very left, the Garden City Shinagawa, which was a very large site, and because that was included, sales are very big, but we have withdrawn that from that business because of the maglev redevelopment, and when you exclude them, we have very good comparison. And also options and food and beverages are now added on top of the hotel business sales, and so for the rental space, we are now able to book added value revenue. And so because GC Shinagawa is going down, the accommodation sales are obviously going down, but on the other hand, we are able to improve the sales mix and book a higher added value sales, and also we are able to increase the accommodation sales, which is doing very solid, and so that is why we are marking the record high, and that is the quarterly sales that we're seeing on a service by service level. And Ririkara and Nobareze, the remaining two segments, these are listed companies, so the numbers I think you are already aware of, but we have the numbers shown here for your information. And these are both ending, the fiscal year is ending in December. And so their first quarter will be between January to March of 25. And the numbers are 2 months later, and so you see Q1 of February 2026, but this is the January to March number, and this is the number that we capture in Q1, and this is the source data. Of course, there's some adjustment on a consolidated basis, but based on what they disclose, this is the number that we are achieving. And as you can see from the number, Ririkara and Novarese both are not enjoying such strong profit, but for Ririkara, starting from last fiscal year, they have a business called Space Solutions, and in that area, there were some issues with the administration structure, and because of the revision that they're undergoing, they are seeing higher costs, and they're struggling in Q1, but that was within their assumption, so they are planning to catch up from now going forward. And on the other hand, for Nobarese, Q1 is during January, February, March, which is during the winter season, and this is the shoulder season for bridal, and you see operating loss. But when you see a comparison against last year, it is growing and the loss is declining. So this is actually a solid result for them.
And the Novarese, if you look at those financial numbers, it seems that these are not so good, but actually in reality, they are making a strong progress. As I mentioned, seasonality in each segment. So let me just explain about this. The first one is a TKP. As you already know, and the spring and the fall are the training season. It's a peak season for the lodging and the event space. Quarter 1 or Quarter 3, those quarters have the higher sales and the profit. On the other hand, we have less business days in summer and the winter year end, and also the summer vacation period. and that's TKP. On the other hand, the Lily color towards the end of the year, and the Novalese, the fall with a good climate. Their Q4 is the peak season with a higher sales. So in each segment, the timing is slightly different compared to the TKP alone in the past. Profit and loss gaps will be more modest. Next is the consolidated balance sheet. Middle is the 2026 February quarter one. First, you can see the quarter one numbers compared to the last fiscal year end. We acquired the shares, so 7 billion yen. Therefore, the net asset decreased. On the other hand, bank loans increased to make the investment for opening. So the liability increased and the net asset decreased. So the equity ratio went down. However, the deposit and the cash, we have about the 20.3 billion yen or so. Soundness and the stability is kept while improving the capital efficiency. We used to have the too much net asset, so we're trying to reduce that. And then we have the cash on hand, and if necessary, we will take agile action to make an investment. Share buybacks that I mentioned earlier. On January 14th, that was the first round, and also second round was announced on the April 14th. So every time we have the earnings report, we mention about the doors, and we have acquired the buybacks or the shares, so 3.5 billion each. So therefore, the total was 7 billion, and roughly 4 million shares have been acquired, and the 10.27% of the outstanding share was eliminated, and we have the 20 billion in cash, so we can still take the agile action if we find the opportunity to make investment. Next, former TKP businesses in more details. Space revitalization business. Flexible space is one, and the lodging, leisure and the lodging, these are the two pillars of this former TKP. First one is a flexible space. Mainly the doors are meeting space rentals. So looking at the actuals of the open and close, in Q1, we have the 20 open, including extension, and we closed the 4, so we increased the floor by 4,000 tsubo, but we reduced by 2,000 tsubo, so 16 facilities increase, and about the 2,000 tsubo increase net. That's the Q1 result. And if you look at this by location and by grade, so the subtotal of the rental space is 214 facilities, 106,000 tsubo. This is the result of the increase and the decrease number of the facilities and the floor space of the directly owned facilities. And other than that, we have the group companies facilities. So total is a 256 facility, 17,000 tsubo. And the main space is the 214 facilities, and that floor space is 106,000. So we still have the big directly owned facilities and the space. And the rental space, flexible space business KPI, sales per tsubo is tracked every year. We reduced or they cut the COVID period. So we compare the pre-COVID and recently. As you can look at this chart, Q1, 48,388 yen. This is the sales per tsubo. So finally, that we exceeded the pre-COVID level. It was a record high level. When we announced the last fiscal year's result, we said that we will exceed in this Q1, and finally we are able to hit the record high number. At the beginning, we talked about the progress against the guidance, and the order is strongly moving. This 48,388, we are hoping to have the upside on top of this number in this period. That is our expectation. So that was the flexible space business breakdown items. Next is the hotel lodging businesses in more details. This chart is the details of the directly on the lodging facilities, and we have 33 facilities or locations. And in June, we have the new opening, and also the new opening will come next week. So if you look at the end of May, the right bottom 27 and the 3,711 rooms. At the end of May, we have increased those numbers, and the sales has also increased. So, and the RevPAR is included as the new KPI that we disclosed this time. Overall RevPAR, so it includes a business hotel and the luxury lodging facility, so it could be misleading, but it is just one of the KPIs. Pre-COVID time, the number of the locations and RevPAR, and right after the COVID, and also the latest fiscal year and the quarter. And the RevPAR latest one is 8,985 yen. Year on year, it's increased by 704 yen. We cannot make the simple comparison, but the number of the locations increased so much. And if you look at the Q1 pre-COVID, it is still higher than that. So it is making the very good progress. Lastly, going back to the flexible space business, sales mix for this sales, we can see the transition by the usage. The right hand side is the latest quarter. The biggest one, 35.7% is the training need, because the face-to-face training is increasing, so that mix has increased. This is the sales mix, and the sales itself is going up, and the amount increases and the sales mix increases. That means that the face-to-face training and event need is increasing, and we have been able to capture this in Q1. So that was the brief financial update for this Q1, and we will have the business strategy from the Nagao.
Good afternoon. Starting from June, I became the CEO and director. My name is Nagao, and I would like to give you an update on the business strategy. Starting from the status of the openings. On this fiscal year, with regards to the openings for the flexible space business, in the central Oita city, we have acquired Soleil, which is a complex building. And Soleil, by acquiring this facility, the flexible rental spaces or will be main focus so that we can drive the rental office business or the food and beverage business, and also Upper Hotel Oita station front that is about to open through the collaboration with Upper Hotel. The value of the station front buildings can be improved. And the second point is Fabit. Fabit is a co-working space and rental office, a brand that is operated by TKP, and Takamatsu and Shibuya and Umeda facilities are to be opened, and the rental space that is opened by TKP, the size of the space or the period that is rented for is managed, and so that it can be used as a rental space. And last one is TKP Sapporo North Exit Conference Center is going to start operating. And this is 3 minutes from Sapporo Station North Exit, and this is an area that's being redeveloped now, and the redevelopment is underway. And because of the redevelopment, the headquarters office are relocated by some companies, and some tenants are moving away, and so we are able to procure more space, and there's a lot of traffic moving in, and therefore I think there is a pretty good potential for this site. Next one is for the leisure air lodging business, which is an opening on Vector Hanyu Terrace, and this is in Iyomo Hanyu in Saitama Prefecture, and we have opened the facility. And this is the first collaboration with the Eon group. And the characteristics of this project is that the existing facility will not be used as a hotel, and instead this is more like a trailer house. And we have 30 space of such trailer house, and we are using a very big space to provide fire pits, as well as providing dog run or dog pools that is very friendly for the dog owners, and we're able to provide a very broad variation of the usage, and this is one of another means for TKP to revitalize those local area. And next one is Shonin Park. This is in Beppu City of Oita Prefecture, and this is one of the redevelopment of business of Shoningahama Park. And this is one of the local project, and we are developing Ishinoya Beppu, which is an experienced type of lodging, and also Sand Spa, spa facility, and also restaurants that are using local gourmet. And we offer a very big space and using a great scenery to promote the goodness of the Oita Prefecture, combining that with TKP's benefits. And that we're building something that is very unique in this area. And on 24th of July will be the grand opening date. Next, moving on to the progress of Appa Hotel openings. We have opened 3 Appa Hotel buildings on 20th of June. One is in front of Miyazaki Nobuoka Station, and also Miyazaki Nobuoka Central and Yamaguchi Hofu, which is in Yamaguchi Prefecture. And these 3 buildings are now acquired and operated by us. And it's an owner change from Appa Hotel, but basically for both Miyazaki or Yamaguchi, we will build a meeting space if we can. And for Yamaguchi Hofu, it's relatively a large space, and so we can use that for banquet space or meeting space. And the TKP services are available in large cities, but also in local cities like that. We can combine meeting space to lodging. We can provide accommodation as well as meeting space. and offer services to those local cities. And this is the status of the new openings, and you are seeing a mapping of the new openings in Japan, and including the ones that are newly opened. We are now having 33 facilities in total. Next is about the strategic investments and business alliances. As Nakamura-san mentioned at the beginning, we are increasing our investment into equity, and we are going to be the major shareholder of only 19.6%. And starting from second quarter of February 2026, they are expected to become a subsidiary under the equity method. And we used to have stake before, and the bridal facilities are operated, and by increasing the meeting space utilization over the weekdays and optimizing the cost, as a group in total, the cost benefit can be pursued, especially in case of Escri. They have the wedding business as well as a construction business as their two core business, and the construction business is going to be utilized to improve the cost as well as leveraging Lirikara. The cost reduction will be actively promoted. This is the mapping of the business domains and the strategic investment. What you see here is the rental space business, which is the core of TKP, and that is taking root in hotels, and mainly around those business. We have the rental space, adding on catering and lunch, and also we're working with Shikigaku to offer training programs as well as event planning or BPO. And the services, in addition to the meeting rooms, we are providing those services. And for space market, in a way that it can capture detailed demand, and also fully utilizing the space, this will be very effective. In the share office, as I explained in the Fabit section, rental space or co-working space will be provided. So the time rental period that's offered by TKP, or the size of the space, can be more flexible in this business, and that way we are thinking of capturing the most recent demands. And these are all related to the space revitalization segment, and the system mapping based on the core business that we have. And in addition to that, we have Escri, and which we now own 19.6%, and also we have Novarese, which is a bridal business that we own 60%. And weddings are basically using space, and that is adding on an additional value of bridal. And recently, because of COVID, the wedding market is shrinking. But in order to identify the optimal point, we are working to drive the consolidation of the industry. And last one is business revitalization. And Lirikara, as you know, is providing interior work like curtains or wallpapers, and these are providing added value to the space, and that's one perspective. And by bringing that in-house as a TKP in total, we can reduce the cost to allow a more efficient operation of the business and generate more profit.
And lastly, the regional revitalization. So using all of those, we would like to revitalize the regional areas. In addition to what I just explained, let me just remind you about our initiatives. It started with the space regeneration and revitalization. Growth of the existing business is very important here. Asset light type of the operation started, and then we started with a business model to generate so much profit, but the consulting, sales, and the value add of the event, we need to add more values to the space so that we can target at the higher sales and the profit. And for space, Lily Color has the interior business and the services. So well-designed and more comfortable space should be created. Not just to the TKP-owned properties, but also to the external parties. And then Novarese and the Escrit, involving the competitors. As I said earlier, the bridal market is shrinking, but we can find the optimal point. So efficient operation and the attractive appeal to the market, we would like to revitalize the business. So space, business, and industry revitalization and restructuring, all of those together, we want to contribute to the local society, which is the revitalization of the regional area. And the Lily Color and the Novarese initiatives progress on next page. First, Lily Color and the TKP collaboration. Using the TKP facilities, we are preparing the satellite room to show the Lily Color products and materials, and also we are trying to promote the use of the Lily Color products and materials in the Upperman managed properties, and the management processes. If there are any redundancies, then we are trying to optimize the cost by eliminating the redundancy, by thinking about the necessary tool implementation. And Novarese has the strengths in the regional area. So in Hiroshima area, from the Novarese facility kitchen, we have started the kitchen or the catering provision services to the TKP facilities from Novarese kitchen, and we are going to apply that to other areas. And also we have the wedding facilities, so maybe the outfit and dresses can be supplied from Novarese. So that was the update on the business strategy. Thank you very much. Now we will start the Q&A sessions. There's no limit on the number of the questions. However, when you ask, please ask one question at a time. If you have questions, we'll bring the microphone. So please mention your company names, affiliation, and your name, and ask question. Please raise your hand if you have a question. Thank you. SMBC Nikko Tazawa, thank you very much. I have 3 questions. First question is company guidance. You said that you have very good progress against the guidance, and the Q1 is in line, and the order was stronger than the expectation, so you seem to have the confidence. 3 months ago, when you issued the guidance, you said that is the minimum that you need to achieve, and you expected the upside, and the order is stronger than your expectation. What kind of the order is strong? Or compared to 1 year ago, how much order increase you have experienced? If you can quantify, say 10% or so, that will be helpful. And you haven't changed this guidance, but in the interim time, can we expect the revision of the guidance? And the second question is, next page, TKP non-consolidated profit margin. If I look at the OP margin, it's 16%, same as the previous year, and FY24 February Q1 was 19.4%, and I'm sure that you are running many initiatives, but in terms of the profit margin, it hasn't experienced a full-fledged recovery, but you have the initiatives to increase the profit. For example, in-house production for this beverage and food, and also from Q1 you will be implementing dynamic pricing. Can we expect the profit margin improvement? On the other hand, can we expect the cost increase impact? For example, office rental and also food and beverage. There are some factors to increase the cost, but based on that, in Q2, can we still expect the increase of the profit? And the third question, financial, the equity ratio, the use of the cash and deposit. You said you optimize the capital ratio, and are you going to maintain the 30% or so? And the cash and the deposit or equivalent increased, and buybacks will be the one way to use that, although you haven't done it this time. And the Lily Color, Nobility, and the S-Cred, are you adding more investment in the existing investment you made? And also the completely new M&A. Can you share how you're thinking about the utilizing your cash and deposit? Those are the three questions I have. Thank you very much for the questions. First question, guidance. The first and the second question I will answer together. If there are any changes to the space rental, yes, we see the changes, and the hourly based rental is very good, and the catering is becoming very, very strong. And the catering usage is 70%, 80%. It's increasing to that level, and that's why we invested in Huxley, the Hoka Hoka Te, the bento box, and the half of their order is a TKP's order now. And the bento lunchbox catering is probably 30-35% OP margin. If it increases, then we can expect the OP margin to improve further. And the leisure and lodging and the APA hotel, we have 20 APA hotel. December this year, December 3rd, this year we will open up a hotel in Oita, so that will be 20. So the unit price and the utilization continue to be high, 90 to 100%. So we are seeing very strong progress, and we get the good room rate and unit price. So profitability will be 20 to 30%.
And within that context, because I mentioned that they're very strong, but also for this fiscal year in the first quarter, Nobilete is making a loss because of the season, and that's a dragger to lower the overall margin. But if you look at the non-consolidated TKP, the dynamic pricing will start to give some impact going forward. But the change that we're seeing is that we expect the changes to take place in second quarter, and we're spending some money in preparation for that change in the first quarter. What's happening is that mainly around the foreign companies, the people who used to work remotely are now going back to the office. And we're starting to see that change a lot. And the meeting rooms will be rented as temporary office, and we're receiving many leads and inquiries, and the sales reps are spending a lot of efforts in addressing that inquiry, and the demand is very strong. And once that happens, once we have that trend of people coming back to the office instead of working remotely, they won't have the place to get together, and they won't have enough meeting rooms. And so Q2 onwards, we expect that there will be stronger needs of wanting to use meeting space as the office space, and we will also be short of the meeting rooms. And because we're going to adjust the supply and demand internally, we will be running out of meeting room space. And so because of those trend, we expect the numbers to be very strong in second quarter. And because we're running out of space, it would be very important to procure the space. And we I think the next challenge is how we secure the meeting space or room for the training that will be used for the new graduates that are joining in April. But in Tokyo Station and Shinagawa Station, we are securing a lot of space as TKP, and there's very limited open space, and so I think the conversion rate is going to be the key point going forward. And in terms of the equity ratio, it's around 30. It's gone down from 34% to 30%, and we have around 20 billion yen in cash and deposits. And we are investing capital into Ririkara and bridal industry. And in terms of the bridal industry, how we revitalize the industry and consolidate the industry is going to be a challenge. But the focus for us is how we leverage the bridal hall on the weekdays. I mean, the construction cost and the interior cost is becoming higher. And if you start from scratch, it's going to be very hard. I mean, if you are developing a hall or a space from scratch, that's going to cost a lot. So how are we going to leverage what we have through renovation and convert that and make them available for businesses will be the key. And so we would like to use our money for that purpose. And on top of that, is it better to acquire the company or not is something that we want to consider. But anyhow, we want to be very active in considering how we spend the money. And in terms of the buyback or for a dividend, we will take that into account. I mean, the first focus will be investing into the business, and while we make investments into the business, we will also consider the profitability and consider returns to our shareholders. Going back to the first question, I mean, for the rental space, I mean, you might think that we should be growing the margin because the top line is growing, and I do agree. I mean, during COVID, we invested into the system, and the system is now finally established, and so we are in the phase of collecting the investment. So we're training our sales reps to fully utilize the system, and that way, including dynamic pricing, the sales will become more dynamic and margin will go up. And so I think we're in a more full scale. We're going to utilize the system in Q2, and the demand of meeting space will be more stronger. And so we want to capture more margin there. And the core business, the organic part, is now finally coming out from COVID, and now we're seeing top line growth, and so we will start to generate more profit going forward.
On the last page, this one. Space regeneration revitalization business, 50 billion, 70 billion, 100 billion. Well, we can see the 100 billion in the future in this market. In addition, we have a lily color and also the bridal business that will restructure the industry that will become the core. So this could be the turbojet, like the basis to support, and the key point is convert the red ocean to blue ocean. If we can do that, then the sales will become the 200 or 300 billion, and the operating profit, the TKP space rental, the core business is generating the operating profit, and it's positive. But the next turbojet for us will be the bridal industry. It's very diverse. It used to be the big box, but the way they do the business is changing in many ways, and it's quite challenging and worth doing this business. And if we look at this matching applications for people to find the others to marry, and also there are some trend to collaborate with the local matching apps. But in the wedding ceremony, the people get together to celebrate, and then some people meet there, and then there's couple get married. That was the traditional way of the wedding business. So this matching business and the wedding business should be linked, and this could contribute to the depopulating society. So we will use also the space on the weekend as well as the weekdays. So even we use the same space, we want to have the structure to increase the profit and the revenue. 10 billion yen OP margin was expected, but the guidance is the 10 billion became that 6 billion. And the next year, do you think you can target at the 10 billion again? Well, this year it's 7 billion yen OP, and if we can make the upward revision, that could be 8, 9 billion and so forth. So depending on the financial numbers we get in Q2, that will be the key. In order to make the upward revision, TKP's core business in Q2 and beyond is important, and the Lily Color and Novarese, how they deliver the numbers based on their target is very important. So I believe these numbers are drafted rather conservatively. So I hope that we can give you the positive surprise, and we want to achieve the OP margin of 10 billion as soon as possible. Thank you very much. Next question. SBI Security Ozawa. I have two questions. The first one is the lodging part. RevPAR is disclosed. Thank you very much. So how is this lodging business? That was something I wanted to know. So RevPAR is a good indicator, and it's just the confirmation. So this accommodation increased by 1 billion from 2.3 to 3.3. How does the profit increase? And Upper Hotel, if you acquire them, then that's an existing business. So from the fiscal year you acquired, it makes the contribution, and you have the new openings in the June, and also the Oita Shonin Park. This is a big investment. So would it be any initial investment from the Q2? So profit of the existing lodging business and the initial cost in the future. Can you talk about that?
So your question is related to the leisure and lodging business. So yes, okay, for leisure and lodging business. So starting from last year, it's been quite strong, and it continues to be strong. And this time, there was an issue of April 5th, and July 5th, and the tourists coming in from Hong Kong kind of slowed down, but we didn't receive such a big impact. And towards the summer, we are seeing some active movement in resorts. And Upper Hotel, they're very strong in large cities. And So in terms of OP margin, average is 16%, but instead we can shoot for 20% or 30%. And the tourist cities like Hakodate or Obihiro or Wakayama or Kyoto, we have locations there too. But going forward, during summer, Obihiro, Hakodate, and Sapporo will become stronger. And so we can expect increase. And especially Osaka, we have the expo. So Osaka and Kyoto, Osaka is continuing with more than 100% utilization every day. So it's very strong. And Yamaguchi and Miyazaki, for the ones that were transferred to us quite recently, we bought them while seeing the track record, and so they're not going to go into a loss. They will continue to generate a profit. And I think it's okay for you to expect that they will continue to be profitable. And for Shonin Park, it will open on July 24th, so it's very close. And the sand spa is now filled with sand, and now I could be booked online, so we expect the profitability will go up. And the biggest profit generator will be the sand spa and the ocean view hotel rooms that are facing the ocean, and we want to leverage those two to generate more profit. And in terms of the initial cost, we will depreciate the cost, and so I don't think there's going to be a huge initial cost. And the start is going to be July 24th, which is at the beginning of the summer vacation period. We wanted to be ready by the summer vacation period. And because it's showing park, we want to bring in families to this facility. So during August and September, once we are able to achieve a rocket start, we can collect the initial cost and start contributing to the profit. I'm hoping that it will start contributing to the profit. And the second question is related to the procurement. You have strong orders in second quarter, and was mentioned that you need to be stronger in procurement. I have a question around procurement. In Sapporo, as you explained, that there's some locations where there's supply because of redevelopment, but in Tokyo, the vacancy rate is 3% and very low. And maybe even if the price is high, you can pass that on to the selling price. So I'd like to understand the procurement status. And I had the opportunity to see Kondamyojin, and you had some interesting facilities for wedding, and that is one first initiative starting from shrines. And so for wedding facilities for Novarese or Escuri, if it's doing well, are you getting approached by some players with good conditions? And so for offices and the other business, I'd like to understand the procurement situation. And for the offices that are built into the REITs or other symbolic offices, including new buildings, there's very strong demand, and so the vacancy ratio is very low. And so if we are to acquire them, I need to buy them at very high cost, and so we're not doing Regis now, and so we don't need to chase them. So as TKP, it's really a matter of renting the space at a reasonable price. And if that is the case, the offices are moving into new buildings. Like Azabudai Hills. When people move, they get pushed into a different building, and that way, the old buildings might become open, or new headquarters might become open. It would take 3 to 4 years to fill that space, and that would be an opportunity for TKP to procure the space. So when people are moving offices, there will be spaces that become open, and so we want to capture them and procure them to by operating them within building a brochure.
And I think we can talk about that in Q2. The large company, their headquarters relocated, and the TKP can take over that. There will be a lot of these project, and we can use that as a rental office spaces or the hourly based rental space. And the wedding facilities, Kanda Myojin, photo wedding is one of the recent trend, and the resort wedding, those are the recent trend. And there are so many inbound who use the Kanda Myojin as a wedding place. So foreigners, inbound tourists come to Kanda Myojin, they can do the photo wedding. And if we use the Kanda Myojin's facility, you can have the wedding ceremony and other events. That's diversified. So it's no longer just creating the big box to accommodate 100 or 80 people to do the wedding ceremony. Rather, the people have the different taste. Some people do that at the hotel, and the Japanese people may go to the Hawaii for wedding. Likewise, the foreigners come to the Japan, especially at the very traditional places. They want to at least take the wedding photo, if not the wedding ceremony itself. And we would like to capture those needs. And the bridal, Novarese, and Escrit, we have invested in them, including the other rural area. We can support other companies, and also the available space could be utilized for the wedding and also the banquet. And we are getting a lot of data inquiries. We may be able to use their space, and we don't have to create the new facility from scratch. So there are existing facilities. We used to use the hotel banquet space, but the doors are almost gone. So there are some city hotels, but the bridal hasn't really reached that point yet. So bridal facility could be converted to the B2B customers event, and it's also positive for the bridal company to make profit. Thank you. Time is coming, so next question will be the last question. This is Tsukuda from Toyo Keizai. Thank you very much, and I have 3 questions, so I will go one by one. First one is food and beverage recovery is big. Q1 it's 1.7 billion range. Before COVID, it was 1.8 or 1.9 billion, so it's still in the midst of the recovery. What are the challenges? For example, you said you are working on the insourcing or in-house production. Is it insufficient, or you need to leverage more sales capability, or you need more capacity? What are the challenges, and what initiatives are you driving? That's my first question. Thank you for the question. Food and beverage, as Nakamura mentioned earlier, Garden City Shinagawa, there was a 2,000 tsubo banquet, and because of the station for this maglev car, and actually if we exclude that, then our sales has already exceeded the 2022 February, so it's good. And this banquet space in Shinagawa that can accommodate 2,000 people, then we want to try that, but we haven't had that opportunity. So if we are given the opportunity, that we want to try the big banquet, and Mr. Nagao, COO, talked about this earlier, the event or consulting, the value added initiatives that you want to drive, and by service sales. So this is probably the option category. Where is it included? How are you going to grow this? And what are the current initiatives you have? If you have the target, please. That's second question.
As I mentioned, we talked about dynamic pricing or systems, but when we say consulting sales, we're just um, responding to what the inquiry was, and that's what we're doing in call centers. And it's the same with sales. I mean, if you receive a lot of inquiries, you would just give price estimates for the inquiries that you received. But going forward, since we implemented the system, we can look back on the track record of how the services were used before, and by looking at the track record, we can possibly propose an event, or we can suggest a more efficient way of conducting events. So we want to propose more, and that way, the venues that are available now can be upsell. I mean, there could be options that can be added on top, and of course, including food and beverage, we can do more upsell. And maybe we can dispatch MCs, or like with the example of Shikigaku, we can maybe promote or propose the training programs, and that way we can increase the sales in total using the same space and generate more profit too. And in order to do that, our sales reps should not just be responding to the inquiries that they get. I mean, they need to do more than what they're asked to do, and be able to consult more to make the customers more aware of what they have not realized. And that way, we can probably increase the sales and maturity of the existing facilities that we already have. And what with regards to the initiatives that you just mentioned, I mean, you mentioned the first quarter is a preparation period, and you're spending some cost in Q1. But what you just mentioned, with regard, would the cost be spent on HR? Is that the right understanding? I mean, we have new graduates joining in April every year, and we're hiring new mid-career hires too. And on top of that, if we were to convert the meeting rooms to temporary office, I mean, if we were to convert them, we need to develop the infrastructure, and also we have to spend on physical security, and that sort of initial cost will be required. So if I were to talk more about what I was mentioning, I mean, it's a matter of how we improve the maturity is one thing, and also how are we going to utilize the DXN system to increase the sales is another point. And so from our perspective, we want to rebuild the transformation, and we reorganize the organization into three departments. One group is the sales rep supporting the existing customers, and there is this other team that is growing the existing customers that we used to spend 5 million so that it can spend to like 20 million. And there's another department that is driving the larger enterprise customers. So we have three different sales reps and sales teams, and we are educating them right now so that they can utilize the systems more. And I'm hoping that they would start delivering the results. That is my view. Thank you very much. The third question, and my last question, based on what you just mentioned, from an HR perspective, you are trying to develop the sales reps that could increase the sales size to 20 million. I mean, what is your thinking about the investment on RHR? I mean, the average income is 4.21 million, and I think it's lower than the national average income. And so, in order to secure the skilled people that can conduct consulting sales, I think that will be a headwind. I mean, that would be an issue when you're hiring mid careers. But if you train the new graduates, and you can probably develop them by sharing the knowledge. So the investment into HR, and if you have any education program or initiative that you're conducting, please share that with us.
The average salary, well, we are hiring the new graduate by 100 or so. And those people will become the sales talented salespeople, and if we have the mid hires, then the salary will be higher. That's true. But the first we try to provide a solid education and training to our existing employees, and the second is the mid-career hire, like a 30 or the 50 people should be hired to do the upsell business. And if we cannot do that, then we should rely on the agent or agency, but in that case we have to pay the fee. But if temporarily, if the salespeople cannot get the business, then we may have to ask the agency, and there may be the business model to throw everything to the agency. But in our case, we are still focused on our own resource, and if we are to use the agencies, then we will combine with our resource with the agency's content to sell. So it's not just simply trying to sell out all of the space. We are still focusing on the insourcing or the in-house production. Thank you. Now we would like to close the Q&A session. With that, 2026 February Q1 financial earnings for the TKP Corporation will end. Thank you.